What's up? It's your friend Jonathan. If you're new here, welcome. We talk about everything health and finance related. I want to jump into this episode and share with you how my experience went finding a solid lender in the Raleigh-Durham. Really probably goes for just about any other market in real estate. So without further ado, let's jump into the video. So what's up guys? Welcome back to another video. Really need your help. Trying to get up to 5,000 subscribers by the end of August 2021. It's currently April. So with your help, we can do it. Really wanted to, let me move this camera in a little bit. Sorry about that. I really hope this video is insightful, helpful, and useful for you if you're looking into real estate or at all looking into vetting lenders. What I did was, my goal was of course to buy a home, and still haven't, but I have a lender. So I've been pre-approved. I've had multiple conversations with my lender, and I spoke to about 5 different lenders. I've spoken to credit unions. I talked to pretty much every option except for private equity and hard money lending, if that's the same thing. It goes to show I'm not an expert, but I'm sharing my experience. So I found that I wanted to go with I believe it would be called a mortgage broker. So this is not a big bank. It's not Quicken Loans. It's not Bank of America. It's not even a credit union. So the lowest rates typically are going to be found what people believe is at a bank or a big bank, and that can be true. What I found was once you start talking to good mortgage lenders that are brokers that are experienced and vetted and just have good reviews on Zillow and everything, you want 5 stars, you want to start to ask them questions, and you want to find out that they're about the same exact rate, and you want them to be honest. So I'll give you an example. I was talking to one mortgage broker. It was a lender, and it was a referral, and he told me what I would be pre-approved for with 5% down. He told me the interest rate, and then he said if you were to do 3% down, this would be your interest rate for conventional mortgage loan. And I thought to myself, there's a difference there. I'd rather pay 5% down. A lot of you are like, whoa, what about 20? Yeah, trying to move as quick as possible, and I don't have that much cash yet, so 5% it is. So same thing though, conventional, same loan, it's just a lower down payment. That being said, your rate is going to be a bit different. One of the things you want to look out for is the lender telling you that they have the ability or some special access or some ability to give you a special discounted rate because of this or that. You want to find the lender that tells you the truth, which is any lender can offer you that, and here's what that means, and here's why. And here's why that other lender, by saying that, isn't doing you any favors. So for me, I don't like pithy, fake, surface level, like people pretending to do me favors. I want someone to say, we're gonna work hard for you because you're our customer, and we're gonna get it done. And here's the truth, and here's the nitty gritty, here's what it really looks like, here's how it works. I don't want someone to tell me, we can give you 2.45 because, you know, whatever else, I don't want to hear that. I want to hear the other lender that I went with saying, okay, yeah, well, what that really means is because you pay 5% down, your interest rate is going to be a little lower than if you pay 3% down. It's not because they're being nice to you, okay? So you don't want anyone trying to yank your chain, trying to lie to you. You want someone who's really real and upfront and truthful with you. And those reviews are real. You know, a lot of times you may see on Zillow a 5-star review, and those should be real. At least I found them to be true. And I went with a private mortgage broker because mortgage brokers can move quicker, I learned, than banks. Big banks cannot move quicker. In this market, what I've learned from family members who are highly successful competitive real estate brokers in different states, as well as friends and my own agent and his firm, is basically you cannot be anything less than the utmost competitive right now. So if you try to get a big bank because you wanted to get a 0.2% lower interest rate, you already lost. Sorry, it's the truth. It's not to be harsh. It's just, you got to look at the reality, and that reality is you need to be able to close in 3 weeks or less. If someone else offers cash on a house that you're trying to buy, sorry, not going to get it anyway. But if it's you and another person that says we need 5 weeks, 6 weeks to close, because and they may offer different, but when an offer comes in and the sellers get the offer in their hand, they're looking at it with their agent, and their agent explains to them, hey, that big bank is known to be slow. You know, they may say 3 weeks in their offer, there's no chance. It's gonna be 6 weeks, maybe 3 months, who knows? But when that lender that you're working with, because you were prudent, shows up in that offer and it says 3 weeks close, the real estate agent knows, yeah, that firm is good. They're gonna close in 3 weeks, and I know that guy personally, or they're gonna close for real in 3 weeks. You may have a little higher of a rate, barely, but the rates are so low, it's going to be negligible. You're looking at, but depending on what kind of house price you're gonna look at, you gotta understand what this stuff really means. I am still learning, but one thing I learned is, you know, 0.2% is a big deal, sure, but if it's 0.02%, that's not a big deal, unless you're talking about the difference between, you know, what loan size you're talking about. But if you're talking about an average home price of $320,000 in the US right now, that's not a big difference. Maybe 10 to 30 bucks a month spread difference. Like, you got to get over that. And if it's going to be the difference between you not even like wasting your time, and also if you have a real estate agent that's telling you, hey, it's cool, it's fine that you're working with this big bank, like, ask them what's wrong with them. Like, maybe they know someone at that big bank, that lender, that's like, if you're working with a slow, you know, no, Google it, like, who's slow. But anyway, back to what my experience has been like working. So basically, after you're pre-qualified, which happens very quickly, they will ask you for a pre-approval process. So they're going to hard check your credit. That's actually, I think, pre-qualified. They're going to ask you for all of your bank statements. Try to keep those organized as possible. If you have multiple bank accounts in across different banks, be sure to include all those statements. You can export them as PDFs and then upload them onto, there should be some form of dashboard. If not, your lender will just ask for them via email. Just include a bunch of PDFs, label the PDFs clearly so that they can make it easy on your lender. You're welcome. And outside of that, you're gonna ask for your pay stubs, you know, your W-2, and your last 2 tax returns, and that's it. And then they'll tell you, hey, your credit score is amazing, or if it's not, you need to get it up. You have solid income. Here's what you can be pre-approved for based on all of your pre-existing responsibilities and debts. And for me, I paid off all my consumer debt, so I don't have any of that. I do have some student loans, but they're very low, and they're on a forced executive order forbearance from the government, so they're not being required to be paid. That being said, I did learn a little in here for student loans. Those are being looked at as 1% of whatever that full amount is. So if you have 30,000 in student loans, which is about the average in the US, you're gonna lose about $100 worth of monthly, $100 worth of buying power on that debt to income ratio. So even though you don't have payments due, you're going to be looked at as at least 1% period, regardless, even if you provide them with, yeah, there's no payments due till September 2021, doesn't matter. So yeah, it's a little disadvantage having student loans. If you have a lot of student loans, it's even worse. That 1% is more money, but it shouldn't make or break you. My experience with the lender after that was pretty much, you know, ask me when you need a pre-approval letter. If you like a house and you want to make an offer on it, I'll send that over to you. I've had a couple conversations on the phone, and I've been very happy with, you know, my lender. So if you have any other questions, be sure to hit the, if you found this video helpful, do me a favor and hit the like button and subscribe down below. And outside of that, yeah, let me know any questions in the comments below. If I said anything incorrectly, I'm sure I did, so be sure to comment that down below. Help us get this channel on the straight and narrow. Much appreciated. And without further ado, tune in for the next video in this real estate focused series, where we're going to talk about really just the real life experience that I've had and my personal experience with all of this in this crazy blazing hot market where people are in heat to buy houses, and it's really can be jarring if you're not equipped and prepared. So I figured, hey, let me share my journey. Appreciate watching. Thanks. Until next time. Peace.